Hey folks, Dan Frio, the rate update. Today is March 1st, 2021. We're approximately 1 year into the pandemic. Where are we with mortgage rates? So let's find out. Don't go away. We'll be right back. Okay, so where are mortgage rates? Well, I had a few comments, people saying, "Oh, dude, really? You're fear mongering. You're doing this. You're doing that." And then I posted, "Hey, we finally have a relief in mortgage rates." And then somebody commented, "Yeah, dude, where you been for last year?" I've been right here. I've been monitoring this on a daily basis. Why my response was that? So for the naysayers out there, guys, I'm just giving you the feedback. What's going on in the market? Rates went up almost 1% in about 2 weeks. That's what I was referring to. It just kept going and going and going. I said, hey, we finally have relief. It stopped. If you had a stock that kept plummeting and plummeting and plummeting, you wouldn't say, "Oh, Dan, that stock's up 50% on the year. What are you complaining about?" Well, because I lost 20% in the last 2 days. That's what I'm talking about. So let's get on to where rates went today. And we're going to find some technicals, and we're going to see there's a lot of good news today. Now, I want to pause everybody. And this isn't fear-mongering. You can etch this in stone. If you want to do something, fine. If you don't, that's fine too. I had several people reach out to me today saying, "Dan, where are rates? I checked with you a month ago, didn't pull the trigger. Now, I really would like to move forward." Don't be surprised if I get back with you. The quote's 0.5% higher in rate than where we were a month ago. And yeah, I said, rates are up 1 full percent in the last 2 weeks. Well, we had some bumps up and down. But Friday we had a nice little reversal, and today we're up a decent amount today. MBSs are up 22. But I also say, watch the news. And what I said last Friday or Thursday, I said, watch the news over the weekend. Be careful, because a lot of the news reporters, they do their research, Monday through Wednesday, normally. Then they'll compile it all, put their scripts together, their postings, they'll air all their information, and then it'll be posted over the weekend or Monday. I'm going to show you specifics on that right now. So we go with... right here, if you see the headline news on CNBC, higher rates and high prices squeezing homebuyers. So we're higher rates. So now we're starting to see, the rates are going up. Guys, I've been saying this for the last 2 weeks. So watch my channel. Don't watch CNBC. MBA forecasts mortgage rates to rise to 3.4 by the end of 2021. Guys, we're almost there now. And we basically, in the last 2 weeks, we went from about, we went up at least minimally 0.5% in some buckets, meaning some specific loan criterias. We're up 1 full percent. That's not me, that's across the board. So be careful on the news that you're watching, but at least it's getting out there saying, guys, you need to do something or you're gonna miss the boat. Because rates aren't going to... I had my team meeting on Thursday, and I said, guys, I hope you didn't expect rates to be 2% for the rest of your life, because it's not going to happen. All right, so let's get on what happened today. MBSs are up 23. Great. And you see that we had a reversal like I thought, and I said, if you go back to my videos, I said we should be trading around this range. And I said that Thursday, or when did I say it? Thursday or Friday. And we're trickling back to that realm, okay? I'm going to tell you this right now, and it's not fear-mongering. Come Friday's job report. So here's the economic calendar for the week. There's unemployment rates coming out on Friday. Let me tell you how this is going to transpire. One way or another, it's going to be A, B, or it's going to be flat. Let's say one A or B. A is employment numbers and everything comes back okay, mediocre. Then you're going to see status quo. You're really not going to see much happening in the stock market or the bond markets, especially mortgage-backed securities, meaning mortgage rates, okay? The other scenario scares me. Here's why. I'm not fear-mongering. Basically, I'm just telling you as it is. If we have a fantastic jobs report, you're going to see, unfortunately, bond yields rise. That's going to spook the markets like we had last week. Now, unless you do this on a daily basis, just follow your portfolio or look at your stock portfolio or what the Dow Jones did last week. Every day it was down 2, 3, 4, 600 points. Then all of a sudden there was a reversal. Why? And all the headline news says, inflation and bond yields or treasury yields. That's where all the data is coming. So let me get to the point here. If we have a fantastic jobs numbers, you're going to see the stock market drop pretty sizably. You're going to see yields on bonds jump, and you're going to see mortgage rates jump. Okay, that's if we have a very, very, very strong jobs report on Friday. So this week, I would highly suggest let's put you in a position to get you set up, get you squared away, get you locked in. Here's what I'll let you know. If rates spike, we're in a great spot. If rates don't do anything and we're in the status quo, you're good. And if the rate during your time of working with us drops over 0.5%, which it shouldn't, because that's a pretty big move. But if it drops over 0.5%, I'll relock you at no cost to you guys. So you really have nothing to lose. Again, I'm not fear-mongering. I'm just telling you what I'm expecting to happen. Now, I don't know how the jobs report's going to come out. I have no idea. If I told you, here's what it's going to be, I'm throwing darts at a dartboard in the dark. I don't know. So I always err on the side of caution. I would highly suggest we jump in and lock you. So I'll have every one of my clients locked in on Thursday because, again, great number. You're going to see the stock market drop and you're going to see bond yields go up, meaning mortgage rates go up, okay? If there's really no adjustment, if it comes back, there's 40,000 jobs created, you're not really going to see anything. You actually might see a little improvement in areas. So that's the biggest thing. I won't even talk about a lot of these other events happening during this week. Friday is the day and the number. So let me go through. It's right here. Friday's basically all the reports on Friday are unemployment, wages, et cetera, et cetera, et cetera. All right, so now let's get on to what the bond market did today, or mortgage-backed securities. Mortgage-backed securities are up 23. I think I forgot to click this on. I'll go through it one more time, and I apologize about that. I said last week we should most likely be trading in the range of right in here. Okay? Right there where that red line clicks. And we were basically down in this area. And we've recovered, and we're getting there slowly but surely. But again, all bets are off on Friday. I don't know what the numbers are going to do, so I'm going to play it on the air of caution, and I'm going to lock all my clients. What happened today? Okay, basically the ease or the tension in the treasuries of spiking is causing the relaxation of this is helping the markets tremendously. The stock and mortgage rates. This number, as long as it's below 1.4, we should be good, because you're going to still have people investing in stocks and mortgage-backed securities. Once this yield hits 1.45 and higher, it spooks the market, and we saw that last week. Why? Is because this yield is the S&P 500 has a dividend yield of approximately 1.48. on all of the stocks in that portfolio. So that's how stock analysts view all of this stuff. They're saying, well, if yields on the 10-year Treasury are, and they were down at 0.4, 0.6 the latter part of last year, you can either get into the S&P 500 with a dividend yield of 1.48, or you can buy Treasuries with a yield of 0.5. I mean, it's triple the return if you go with the S&P. So that's the trigger points with a lot of this stuff. Once U.S. Treasuries hit the 1.45 or higher, you can invest in Treasuries much safer than you were stocks. You'd lose out on the potential gain in the stock prices, but that's how a lot of analysts look at this. We're up 23 on the mortgage-backed securities market. I told you we were overbought or oversold when we had this. This crash was okay. It was settled kind of, but this crash was way oversold, and we recovered about half of that so far. I could see that we possibly could get to this 102 right here in the technicals. I'll move that up so you guys can see it, the 102. So the newbies out there, just so you know, when we focus on what's happening with the mortgage-backed securities market, this number right here represents what's happening to the price, not the yield, the price of a mortgage-backed security bond. As the price goes down, yields or mortgage rates go up. When it goes up, conversely, the other way, when the price goes up, yields or mortgage rates go down. We love green, we hate red. Okay, this was a pretty big day. They came out with a lock suggestion, this subscription that I apply to. They came out with a lock suggestion earlier today, and they completely missed the boat. Follow me, guys. Don't follow Wall Street. Don't follow your analysts. Don't follow what these technicals are telling you. Follow me. I'm dug in on this on a daily basis. This is what I do for a living and have for 30 years. What had happened throughout the day today? It's a seesaw. But we had a great recovery. Look at all these green candlesticks. What that means is basically we have more buyers than sellers. What I don't like at the end of the day, we had more sellers closing out because there was probably some profit taking. That's a pretty big increase in the price of a bond. So you probably had some sellers there at the end. But I'll take it all day long, a plus 23. Okay, all day long. And basically, again, what's happening is you have the bond yields coming in, plus a lot of other technicals. The Dow was up 600 points today. Johnson & Johnson had an emergency vaccine approved. They're going to get tons of that out. Inflation fears. Here's where inflation was last year. January, February, and March are usually really bad anyways because it's just because of winter and everything else. It looks bad. So when we have a 1.5% inflation measure right now, that's pretty hot compared to a negative, 0.4, 0.1, and so forth. So, but I don't think this is going to go out of control here in the short term. Once this $1.9 trillion stimulus comes out, oh boy, 6-8 months down the road, you're going to see the repercussions of this. I hope I'm wrong, guys. I don't think I'm going to be wrong. The calendar, we already went through the calendar, what's going on there. I'm not really going to go over any of this stuff. I'm going to say it's irrelevant up until Friday. These job employees, these job rates and percentages and hourly income and so forth. Friday is going to be the day of days that are going to dictate what the bond yields do and what the stock market does. Headline news on mortgages, I just posted this shortly ago. I didn't have it. It's not completely updated, but there's just read through it. I post this on all of my social media as well, the link to this thing. So check out that if you would. So that is it for today on the mortgage-backed securities realm and what's going on with rates. My name is Dan Frio. I do this every day. I do 2 videos a day now. I was talking with my son and my team, and they're like, dude, you know a lot about stocks and bonds and the economy and things like that. Pretty kind of cool. And I was like, well, why don't I use that to just reach out to people? Because I'm doing videos every day. I have a studio in my office, as you can see. It's not the most elaborate thing, but I find it's home away from home. I know about stocks, bonds, cryptocurrencies, 401ks, tax returns, how to buy stocks, how to short sell it, how to short it, how to put stop loss. I know a ton of things about this, and that's why I have a degree in economics, and that's what I wanted to be. I wanted to be a financial planner, but I got in the mortgage business years ago, and I love it. So I'm just sharing my knowledge with you guys. I'm not telling you what to do. I'm not advising you how to buy stocks and things like that, but check out my morning channel. You might find it intriguing to learn how, what stocks are doing, why, some things are doing what they're doing. Bitcoin, what is it? And I explain that. I actually have a guy, he's been he doesn't have COVID, but he's been under the weather for about 2 weeks. And he should be joining us this week to explain to you what Bitcoin is and all the other cryptocurrencies and things in a really deep format, because I have a lot of people asking, how do you buy it and so forth. Again, I'm not a financial planner. I'm not a stockbroker. I don't get paid for this. I don't do this. I don't advise you of that. It's for educational purposes only. I have to say that for legal purposes. So I'm not telling you what to do. I'm just telling you, I'm trying to teach you guys things, just like I'm trying to teach you guys in what's happening in the stock market or the bond markets, in real estate. So my name is Dan Frio. I do this every day. If you're building a house, buying a house, refinancing, in forbearance, I need you to call me, okay? If you already are pre-approved somewhere and even locked in, let's compare your rate. If I can get you a little bit lower rate, save you $2,000, $3,000, $4,000 in fees. What is a mortgage? It's you applying to get money. So you're trying to get money. Well, let's try to get you money as cheap as we possibly can. Okay? It's just money we're trying to get you. The more effective and more efficient you get that money, it's going to save you in the long run. Huge. So let me show you how to reach out to me. The best way to do it is go to therateupdate.com, and you're going to scroll down below. This is our phone number, 800 our 800 number. I'll phrase it that way, but it's 844-775-LOAN. So 844-775-5626. My email is D for Dan, Frio, at preferredrate.com. Or if you want to apply online, you can click here and apply. This is a full-fledged application. It'll take you about 10 minutes. If you're like, I want to buy a house, but there's a lot of things I don't know. Well, click here. Don't think about it. Click here. This is going to ask you a ton of questions. Not a ton. It'll take you 5-10 minutes tops. It'll ask you a bunch of questions. Based on your answers, it'll help me determine the program to fit you into. Same thing here with a refinance. I have people that are still calling me today with rates in the high 4s. Well, they've been in the 2s for years. Like people are, kind of quoting me online. Hey, the rates are lowest they've ever been for, last few years. What are you talking about? That's what I'm talking about. There's still people out there with 4 and 5% rates. Let's at least talk. And it's no hard pressure sales. I'll answer all the questions you have. Hang up. If you like what you heard, or you're like, I think there's something here. Well, go back here, apply now, or call me back, or email me back, and let's get the ball rolling. That's how to do it. So what I always ask people to do is a couple things. First, please give me a thumbs up. Loving the thumbs up. We're getting about 400 to 500 subscribers a month. Help me get to like 20,000 or 30,000 by the end of the year. I'd love you for that. But click the bell down below so every time I do post a video, you get an alert. And please subscribe. You subscribing helps the algorithms get me out to more and more people so I can help at least advise more and more people in regards to mortgages, and as well as a ton of other things. So that's it for today. God bless, guys. I appreciate you watching, and hope to hear from you soon. But otherwise, be safe, be healthy, take care, and I'll see you tomorrow. Bye-bye.